I'm Deborah Borchardt, and this is your midday market update. Right now we're seeing pretty much all selling going across all three indices, although it's not terribly so. Now with the Dow, we are seeing it up, but the Dow has been flip-flopping back and forth between the red and green zones today. Joining me now is Mark Newton from Grey Wolf. So Mark, Janet Yellen is speaking down in Washington, but it doesn't seem like anyone here is really listening. Our momentum stocks are down again today. Biotech is down. It's almost like a repeat of what we saw a few weeks ago.
I think that's right. I mean, the majority of the weakness has been seen in the Russell 2000, a lot of the small cap indices, some of the tech names that really don't seem to have bottomed just yet. And so, the S&P and the Dow as of the last couple of days have started to show a few more signs of joining the Russell potentially, but it's important to note that the S&P is still basically unchanged from almost 2 months ago. So we've seen almost very little progress, if anything, with the S&P and the Dow. They haven't moved higher, they haven't moved lower. It's been predominantly the Russell, which is now challenging, and if not today, potentially breaking the April lows near 1100 for the Russell 2000 index. So that can definitely be important, I think, going forward. The key will be if the S&P and the Dow also start to follow suit and break weekly lows, and then we start to see all the indices start to move down in unison, which for now really hasn't happened, and it's just been a handful of stocks.
All right, so where are we at with the Russell? What do we have to watch on the Russell to get some signs that it's really broken down?
Well, I would argue that a meaningful, not only daily close, but weekly close under 1100 would be extremely important and likely cause some of the other indices to start to follow suit, and we see potentially a minor correction in stocks. It's really tough to make more of this than just a minor pullback until you see these broader trend lines be broken. We've had people come out of the woodwork and call for corrections. Look, it's not happening right now. The S&P and the Dow are just, they're on standstill. We have all the traditional problems which are still very much in place with fewer stocks hitting new highs and this and that, but yet, nothing really seems to phase the market. The one thing I'd mention is that we're starting to see signs of both financials and tech continuing their recent slide. The financials yesterday, in relative terms to the S&P, hit new monthly lows, and that's a concern when you look at financials and tech, and they make up about a third of the S&P. And so when you see two leading groups like that continue to be under pressure, that's certainly something to worry about, along with the geopolitical risks of what's happening right now with Russia and Ukraine. I mean, I think the market still is paying attention to some extent with that, but still it pays to watch the JPY and dollar yen. That's broken down of late. Treasury yields continue to move lower. I think sentiment's starting to get fairly bullish on treasuries, at least in the near term, which means that maybe they stall out a little bit, but the economic growth still seems to be fairly subpar, and now we see the downgrades of GDP by some of the major Wall Street firms, so it's a concern, but I don't expect anything outrageous to come out of this testimony. I think that the market's still muddling along, the economy is slowly but surely growing. The markets are in a standstill, and we've seen sector rotation. So.
All right, well, that's it. Continuing malaise here in the market as Janet Yellen speaks. No one's really listening. Again, we are seeing some breaking down in the momentum stocks and the biotech. That's Mark Newton from Grey Wolf, and I'm Deborah Borchardt with The Street.